Siddharth Khemka joins us. Let's connect with him. Let's talk about where he feels markets headed. Why are we seeing so much of strength? Everybody is saying valuations are expensive, valuations are stretched, don't invest, save, don't invest, sit on cash, but markets are not coming down.
So Nikunj, hi, good afternoon, and wishing you and all the viewers happy Independence Day in advance. So if you look at the markets, yes, definitely a case of strong liquidity, which is supporting the sentiments, or you can say the indexes as well. But what is also supporting so far has been the strong macros that have withstood the global headwinds, and that continues to be the case, which kind of makes a positive case going forward as well. Whenever the interest rate cut cycle starts, the expectation of flows from global markets to Indian emerging markets, and especially Indian markets, that could also be pretty strong. Especially given the fact that last few months FIs have been consistent sellers in the broader market, and that is a space where despite the you can say a lackluster performance by Nifty in the last couple of days, the mid and small caps have outperformed. So clearly, it's like definitely a case of very strong liquidity from the domestic flows, be it the DIs, be it the HNIs, be it the retail investors, and that is what we are also seeing in some of the new papers, the IPOs that have come out. And you would also see the appetite for from the institutional side, both domestic and foreign, for the bulk hoards of you can say OFS or blogs that promoters or PE funds have sold. We have seen huge, humongous demand for some of these papers. That only goes on to say that show that the appetite for the right quality of company and the right business is pretty strong in the market.
That's a view coming in as far as some of these spaces are concerned. Siddharth, what looks interesting? If I had to ask you your pecking order within sectors, stocks, anything, give us some Independence Day idea if you can, or some themes that you're watching out for the next few months or weeks as well.
Sure, Anisha. I think on a broader sectoral perspective, some of the sectors which really stand out in post the result season, the one sector that clearly stands out is the pharma space. Very strong numbers from some of the large names, and we have seen consistently now back to back 2-3 quarters where the numbers have improved sharply. On an aggregate basis, our healthcare space have delivered upwards of 20% net profit growth. So that is one space that we believe could continue to do well. Apart from that, FMCG is another space where a lot of commentary is about rural sector picking up and growth being better than the urban. That is another space. Automotive is the third space where we believe there is a good flow of demand, and with some of the commodity prices stabilizing, margins have also kind of improved. So that's the third space. And then from the broader markets, we like some of the names. Recently, we have come out with new ideas from the broader market. On the real estate side, we came out with the initiation on Signature Global. It has become a leading real estate developer in the Delhi NCR market with a focus on the affordable, the low and mid-income housing segment. It has shown strong execution capabilities with a strong project pipeline of 30 million square feet to be launched over the next 2 years. Hence, we are expecting a steady 35% CAGR in the bookings. The company also looking to foray into the premium housing segment, which should add to the overall business growth. So there we have a strong positive view with a target price of 2,000. Today we come out with a new idea on Gravita India. It is a theme on the recycling, or you can say the entire theme of recycling, and so that space is also doing well. Gravita is a leading player in the recycling industry, especially with a lot of focus now on the EV side. The lead batteries and other batteries will be coming up. So the company is setting up. It does 88% of its business come from the battery recycling, around 8% from aluminium, and very small from plastics. So we believe that this company could continue to do well. We are expecting a revenue CAGR of 26% and PAT CAGR of 30% over the next 2 years. And we have a target price of 2,350 on Gravita India.
So those are a couple of names where MOSL is positive on. Thank you so much for sharing that with us, Siddharth. But coming to you, Srikanth, what's your take coming in on the realty pack? How is this space looking to you? Because it did go into some rough patch right after the budget. Right now, also the the sector is a little bit subdued. What's your outlook coming in for the realty sector in particular?
Yeah, I think we saw substantial outperformance in almost all the real estate stocks, and even index did really well. But now I think it is into corrective mode. It is just correcting from the highs. It is not at all like showing any signs of like disturbance. I'm not seeing any major downtrend in the stock. I'm to say in the overall sector. But yes, there could be the possibility that we could see further more correction along with the overall trend of the market. But broadly, we are of the view that we should look for adding specific stocks like DLF, Microtech, Prestige. These are the stocks on which we are specifically bullish. And in this particular corrective phase of the market, I think we should look for adding them, because in all these stocks, we are expecting at least 20-25% sort of appreciation in next few months. So overall, it's a buy, and strategy should be to buy on dip corrections.
Let me come to you actually, Nuresh. Let's talk about the IT sector, because today one sector that is trying to hold on and actually lend some support to the market has to be the IT sector. It's performing well in trade today. You have TCS that's seeing a good uptick, Infosys, all of them are seeing a good uptick in trade. What's your take coming in on the IT space? Do you think that it's a space that you can bet on and rely on right now?
So for now, waiting out for a further couple of days of follow-up action. So today's price action is strong. But if you look at, say, a TCS, it needs to cross 4,300 odd levels for a momentum confirmation. Same way, HCL Tech, which has made a strong recovery from 1,300 odd levels, 1,650 is a breakout point. So a lot of these names are showing interesting formations, but as of now, it's a one-day move. The good part is the correction has not been deep out here in the segment, and we've started seeing a recovery. So out here would wait for follow-up action tomorrow. If it sees further action in the next couple of sessions, then maybe you are getting into a trend across the IT pack. So strongly on radar for now, good price action.
Price action, that's the IT sector, and strongly on the radar. But Siddharth, the one entire space that has been on everyone's radar right now has to be the new age tech stock companies, or the new age companies, or the class of 2021. All of them have seen a good comeback move, actually, be it Nykaa, be it Policy Bazaar, or for the matter of fact, Paytm as well is back from the lows. Zomato has been actually winning all the way through. What's your take coming in on that space? Do you think that a relook is warranted?
Yeah, I think that is a space that keeps buzzing, and rightly so. If you look at some of the numbers, Zomato came out with very strong numbers. Even PB Fintech, Policy Bazaar came out with strong numbers. Nykaa is now showing some improvement in numbers after a couple of weak quarters. So by far, these companies have realized that they have to sooner or later focus on the part two profitability, where at least the e-commerce companies, they have looked at increasing, not only started charging, but then now increasing the platform fee, which is leading to improvement in the overall operating profitability. So within that pack, what we like is Zomato. We have a target price of 300. We upgraded the target price after the recent results. Q1 far ahead of expectations. And if you look at the core food delivery business, that is pretty steady. But what surprised on the positive side was the Blinkit business, where the gross order value increased by 100%. We believe that, again, these kind of opportunities, high growth opportunities, is kind of once in a generational opportunity to invest and participate in, especially the retail, grocery, and the e-commerce space. So that should lead to a healthy profitability over the next few years, and the re-rating should continue for the likes of Zomato. So that I would say that within this pack, we like Zomato with a target price of 300.
Target price of 300 rupees per share coming in for Zomato. I'm sure that all of them would be rubbing their eyes and not believing the targets that are being set for this company. But the fact that the financials talk for themselves, the way the company has made a comeback and has been living up to it. Thank you so much, Siddharth, on that note, for joining us on the show and sharing your top calls as well as the sector outlook going ahead. But
if you like this video, then like, share and subscribe to ET Now.